Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro-dollar. A small bearish black crow yesterday after the previous two sessions indecisive patterns, the last one being an indecisive doji cross that was based and closed right on the June 2018 high at 118.51, with the June 2025 high a little lower below at 118.29. Below this we have a fairly clear zone down to the green short medium moving average, currently at 117.58, with further down the October 21 high at 116.92 and the mauve medium moving average at 116.86. Overhead, the next resistance is the bright pink neckline extension to the April to May 2020 reverse head and shoulders pattern. It's currently at 120.04. Overall, the market remains within the mid-2025 based bright red shallow bull channel, currently 116.05 to 120.84. This pattern is the main showrunner for this market. Now so far today, a little lower still, capped by the June 2018 high and held up by the June 2025 high. Cable, aka sterling against the US dollar. An immediate countering bearish harami, if only just, and possible bearish double yesterday, after the previous session's bullish engulfing pattern. Prices dipped down back below and closed under the congestion from the February 22 high at 136.43 and closed right on the next congestion below at 136.21. We are still over, if only by a very little, the broken and very shallow dark blue bear channel dating between early July to early August last year through to late January this year, and that's currently 129.84 to 136.11. As I said yesterday, and I quote, staying above this dark blue bear channel will now be the single bullish imperative of this market if it is to retain its bullish nature, end of quote. Well, so far today, a further significant decline, with prices pushing down through the supports, now resistances at 136.21 and 135.81, as well as the dark blue broken upper bull channel line. Below we now have supports at 135.55, 135.35 and 135.16, the last one being the 2019 high, and where we stopped earlier in August. It'll be interesting to see how the market copes with these, plus the added interest of the rising green short medium moving average that's below, currently at 135.07. US dollar against the Japanese yen. A bullish engulfing pattern yesterday after the previous session's indecisive doji cross. Prices bounced up off the 38.2% Fibonacci line of the July 23 to July 24 move at 152.52, but only as far as the 61.8% Fibonacci line of the 2024 move at 153.40, as well as just short of the dark blue upper tine, it's currently at 153.76, of the very, very acute late January to mid-February bearish Andrews pitchfork. Further down we have the interesting combination of the October 22 high at 151.94 and the November 2023 high at 151.92, quite close together. We regard them as one actually. This halted the decline in late January and should not be overlooked. Even further down is the bright red lower bull channel line, currently at 151.21, of the previously breached bright red April to November 2025 bull channel, the upper bull channel line. And the bull channel is currently 151.21 to 158.09. I should also add that I may finesse the acute dark blue bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move if pressed. especially on any move towards the mauve medium moving average overhead, which is currently at 154.86. So far today, a move higher, testing the dark blue upper time but failing at the first attempt so far, though not falling as far as the 38.2% Fibonacci line at 152.52 right now. US dollar against the CNH, the offshore Chinese yuan. A somewhat impressive bearish engulfing pattern yesterday after the previous session's indecisive spinning top. We're now truly back down within the originally and previously broken December 25 to date bear channel, currently at 685.02 to 689.59. I suppose in some ways we really never left it when we broke higher in late January. The effect is we have a new low and low close, one not seen since April 2023. Below we now have the 50% Fibonacci line of the February 22 to April 25 move at 686.60, with further congestion at 685.58. Both of these are within the bear channel right now. Looking overhead, well, we have the interesting bright red extension to the upper trend line, currently at 693.26, of the May to August 2022 ascending triangle, as well as the closer May 23 low at 689.53. Now so far today, a slightly higher open but with no real incentive right now to recover yesterday's fall, nor really to extend it lower either. US dollar against the Brazilian real. A higher but still indecisive spinning top on Friday after the previous session's key reversal up and bullish engulfing pattern. It was a continuation in many ways from the reactionary jump up seen in the previous session from the 50% Fibonacci line of the October 2019 to December 24 move at 513.82. But the rise was capped by the combination of the 61.8% Fibonacci line of the April 22 to December 24 move at 524.07. And perhaps more importantly, by the declining dark blue middle time, currently at 523.02, of the important mid-December 24 to mid-April 25 bearish shift pitch hawk. This bearish shift pitch hawk is still the showrunner here for this market. It's a brilliant one actually. US dollar against the Mexican peso. An unsurprising and very small indecisive doji cross yesterday after the previous session's immediate countering bearish engulfing pattern. The market remains, if only just, below the breached November 25 to date based bear channel, which is currently 17.1720 to 17.6226. It is not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices found it tough, testing the March and April 2016 lows at 17.0923 and 17.0389 respectively. This hasn't stopped the market forming a possible bearish cat's ears pattern over late January and February, though so far the pattern has not been triggered on the downside. I suspect this may be due to the influence of the nearby bright red neckline extension below to the January to May 2021 head and shoulders top, which is currently at 1681.81. This, apart from the 2023 low at 1661.94, is all that stands in the way before the significant congestion zone between 1625.52 to 1646.25. Finally, I've highlighted in bright green the previously drawn April to November 2025 bearish shift pitch hawk to help show the bearish angle of attack of this market. We are today just above the middle time, which is currently at 17.0883. Now, so far today, a small push higher, back up over the dark blue lower bear channel line, but not by far.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.